Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Our line in the sand level for the July corn contract sits at 360. And as luck would have it, we do have a bend but do not break mentality, with the market having come in and tested at 360 and 3/4. So really just 3 ticks away from some of our stop positions for a long position inside of this market trade. As we can see from this point forward, the market gave us a brief retest that came in at about 362 to 363. And from there, the market has since been advancing, and we got the benefit of a weather event over the course of the weekend that caused a very big advance or a very big move up with this market on Monday. On Tuesday, we saw a bit of a correction, but today we can see already that the market is moving its way back up again. And for now, the key level that we look to are the highs that we've seen previously that sit at right at about 380. This market is now testing this 380 for its third time. And this time, as it looks to make its way through, we believe that the market should sail through this level with ease. Upon getting through this 380 level, we do like 385 as a key level of demarcation to confirm that the market has a better chance of reaching our target of 400. Volatility-based support continued to hold up well for this contract as well. Coming in near the 365 half number, the market oscillated across this area a number of times, from which point it did bounce up, went up to about 375, gave us a small pullback, and is back up inside of that area near 374 half. From here, we anticipate that the 385 level is going to be significant for this market, and upon reaching 385, it has near-term resistance, but in addition to reaching resistance there, we would be comfortable moving stops up from the 360 number up to about the 365 to 370 area upon reaching 385. As would be expected, we have a similar formation for the December contract. Unlike the predecessor contract, this market actually made a higher low coming off of the previous low retest. In addition to that, we now find the market holding up above 385 very well. 386 is the point of control number, and so the way in which the market did bounce off of this level was quite impressive. And now it's moved its way up to the 50% quartile of resistance of the previous major all-time high low for this contract range, coming in at about 390, so that we can see the market now is trading just above at 392. And we do see a bit of resistance coming in near our 1-by-1 downside angle. Once the market's able to break away from this region, we anticipate that the market would make its move up to about 400 to 410, which coincides with 1 standard deviation above the point of control. Volatility-based support held up very well for this contract as well. Also, we can see our 180-degree mark of 382 and 3/4 was a very significant level. The market's moved up about 45 degrees to 392 half. And as long as we close above 392 half this week, we are pretty confident that the market should reach the 400 to 402 level prior to coming off the board. We have quite a bit of time left over before that happens. Moving on to soybean, we can see that the market here touched off at 25% quartile level, and from which point it did bounce very well. Up from there, we can see that 1 standard deviation below the point of control is at 960. And as this 960 level, that was very important for this market to get up and over. Now that we're clearly up and above this range, the market now is actually potentially reaching some resistance as it gets close to the 1-by-1 downside angle. That would come in conjunction with the market being overbought as well. And so a small pullback, as long as it stays above the 960 to 970 area, would suggest that there is still a very good chance that soybean would reach our minimum price objective of $10. Upon reaching the $10 mark, we believe somewhere in the neighborhood of $10 to $10.10 should be a significant area of resistance, as that coincides with the point of control for this contract. For now, intermediate resistance lives at 983.5. Upon reaching there, look for some minor resistance to come in, as 360 is a significant threshold for markets in general. But upon breaking through there, the next threshold that we spoke about is that $10 mark. So somewhere in the neighborhood of $10.10 to $10.15 should be where this market looks to find very good resistance before perhaps giving a major correction from there. At which point we would not be surprised to see the market then drop back down and perhaps test the 360-degree mark near 385.5. And depending on whether or not it's able to hold above, can see another leg back to the upside, depending on whether or not any interruptions to the crop develop. Moving on to the November contract, we find that 972.75 is the major quartile level for this contract. Now, upon being able to break above here, the next major area of resistance should be our 1x1 upside angle overhead. Upon breaking through here, then our next target objective would be one standard deviation above the point of control, which is at $10.05. And so this is where the market looks to really find some good resistance upon being able to break through and find some legs, or at least get some strength. We have volatility-based resistance overhead in the range of 975 to 987, or so right at about the 980 mark, we should anticipate some good resistance. Now, if the market is able to break through here, then your next key level is going to be very close to that $10 mark that we just spoke of. And so this is going to be the next key area to watch to see the way in which this contract responds. July wheat futures met our minimum price objective of 420, but over the weekend, surprise snowfall sent the market rallying in great fashion. In fact, over 20% gain on Monday, where the market came up and then tested overhead resistance at the quartile level before finally pausing over the last day or two. The market currently is now overbought, but it is nice to see the fashion in which the market came in and reached our minimum price objective of 420. It came down to about 416 before turning around, and currently we now have very good resistance again at that quartile level. Whether or not this market will sustain this strength remains to be seen. The markets are still evaluating the level of damage from the actual snowfall, and depending on what the reports yield, will give us better insight as to whether or not these market advances are able to be sustainable. We've been producing these charts for you for several weeks now with these key levels, and it's very interesting to see that the key areas that we've spoken to you about are exactly where the market has been able to find opportunistic support and resistance. We can see down at the 420 level, which was our minimum price objective, that the market did reverse. But also on the flip side, we have shared the importance of the 180-degree mark for markets. And lo and behold, the high of the week came in right at that 462 number, or at least just shy of it. And as you can see, this is where the market is potentially stalling a bit. We are now reaching one of our vertical time projection time zones, which is where the purple and gray makes its intersection. So from here, we would not be surprised to see the market actually pause, give us a small pullback that perhaps lasts or moves down into about May 23rd. And from there, the market will either accelerate to the downside or make a move to the upside. In either case, we anticipate something of significance happening near that May 23rd. As would be expected, the price action for the December contract looks very similar. We can see the market is now holding up against the quartile level here near 490. And at 482.5, we have our point of control. And so you can see the way in which the market went straight up through that point of control to reach that 490 number. The next key area of overhead resistance is at 514.5. And that 514.5 is one standard deviation above the point of control. It's going to be key to see whether or not the market is actually able to move a little bit higher from here as the market weighs out the impact of the recent weather conditions. The 180-degree mark for the December contract lives at 496.5. And again, you can see the market finds very good resistance very close to this area. And we would anticipate that volatility-based resistance would make a shift very close to where current price action lives right now. We'll close out with our usual crude oil contract. From here, we can see that we looked for major resistance to occur near that 54 number. The market fell from here, which coincides with volatility-based resistance. And our minimum price objective of 46.25 looks to be very close at hand, with the market now testing and just breaking previous pivot lows. Now it sits near that 47.58 number, and over the next couple of days, we would anticipate that the market would come in, reach volatility-based support, and touch that 46.25 area for a target before potentially finding a bit of consolidation. But as we can see here, the market, even though it is oversold, the way in which it is now traveling in that oversold area suggests that the downtrend may continue and may be stronger. So even if the market bounces in this area of 46 to 44, a small pullback that finds resistance perhaps near that 180-degree mark near 49 could very well be a nice point for the market to then drop back down again, which could in fact coincide with the market pulling back up to being overbought and giving us another leg down. In either case, this 46.25 is our price objective for now, and from there we'd simply wait to see what materializes before we would jump to any conclusions. Thank you so much for joining us for our weekly market update. Look forward to touching base with you again next week.